Hi, it's Michael and David here, presenting Small Business Banter. A healthy micro and small business sector means a successful economy and a more vibrant society. Small Business Banter is about helping regional business owners better prepare for the current challenges and also for the next stage of business success. I'm Michael Kerr, founder of Kerr Capital, advisors to business owners. Each week with David Gregory, CEO of the Small Business Mentoring Service, we'll interview a different small business expert or a fellow business owner and operator. And they're going to share their best tips and insights for you, the listener. Small Business Banter is brought to you from the studios of 104.7 Gippsland FM and heard across Australia on the Community Radio Network. Thanks also to our supporters, Kerr Capital and the Small Business Mentoring Service. Funding a small business has always been a challenge. A new way to potentially fund businesses involves equity crowdfunding, a relatively new phenomenon. It's a major opportunity potentially. In today, we have Matt Vitale, who's the co-founder of Australia's leading equity crowdfunding platform, Birchal. David, should be an interesting chat.
Certainly should be. I think this is one of the key issues that small businesses face. The ability to get the funds to get up and running is such an important factor. So it'll be a really interesting discussion.
Welcome in today, Matt. Before I hand over to you, I just wanted to give the listeners a little bit of background. You're a very experienced financial services lawyer, an entrepreneur. You've worked across the spectrum of law firms, but now as co-founder of Birchal, work full-time in equity crowdfunding. So we're wanting to share with the audience your experiences around the whole equity crowdfunding industry. You list amongst your skills and competencies many things: corporate law, commercial law, regulation, compliance, crowdfunding, and barbecue. Can you firstly finish off and tell us how the barbecue thing got in there before telling us about your professional and career?
My wife and I entered a cooking contest as part of the Melbourne Food and Wine Festival a few years ago. The first ever competitive barbecue contest that was held here, and which is a really big deal in the States. We won, and as it happened, got an invitation to compete at the World Championships of Barbecue at the Jack Daniel's Distillery in Lynchburg, Tennessee. Yeah, it was a kind of a runaway freight train, really, in terms of the opportunities and things that it opened up for a period of time. And it's a lot of fun, and I still cook barbecue on the weekends and have some minor business interests in the barbecue world. But very separate life to my day job.
Right. And yet there's no samples that have been brought in for us.
A little bit early maybe, but yeah. Anyway, that's great practical hands-on experience in running a small business. Your professional profile, particularly now, what's the quick story there? Yeah.
So I was in private practice for several years, a couple of law firms specialising in financial services regulatory work, and was observing what was happening in the UK in terms of equity crowdfunding over there, seeing the direction that it was going in Australia, and started chatting with my co-founder in Birchal, Alan Crabb, who co-founded Possible, which is a reward crowdfunding platform. And we got working together on this business that really is the early stage of what we expect and hope will be a big industry in Australia.
It's a really interesting area. It's a challenging space for small businesses, the whole issue of funding. Can you explain exactly what is crowdfunding and how your particular model works within that space?
Sure. So equity crowdfunding really is offering equity interest, so shares, in our case, fully paid ordinary shares in a business. So for the first time, proprietary limited companies can make a public offer of shares to retail investors, so that is mum and dads, everyone. But most importantly, that we can advertise these offers online, which is quite unique in terms of securities offers, which are usually fairly heavily regulated in terms of how you can advertise and promote these offers. And that presents a few particular advantages for businesses that have a strong consumer proposition. And the difference with reward crowdfunding, so a lot of people would be familiar with platforms like Kickstarter and Possible, which is really pre-selling a product. And there's one example, a big example from the States, which I think is great for highlighting the tension that exists between the two. So Oculus is a virtual reality headset company, and they crowdfunded the Oculus Rift, which was a VR headset, one of the early ones in the industry. They had a target of around 200,000, and they raised about $2 million on Kickstarter through a reward crowdfunding campaign. Within 12 months, they'd sold the business to Facebook for $2 billion.
Wow.
But the people that backed the project were still waiting on their headsets because it was a reward crowdfunding model, and all they had purchased was the headset, which hadn't been built. Now, had that been an equity crowdfunding offer where these people had, instead of gotten their headsets, gotten shares in the company, it would have been a 1,000% return.
Wow.
So that's the tension between the two models.
Right. So for regional, for small business owners, equity crowdfunding is an opportunity to bring in shareholders with some restrictions and with some limits. But so what are typically the prompts where an owner of an existing business wants to bring in equity crowdfunding? Can you just talk a little bit about the sort of those prompts and why?
Sure. It's often a funding need. So particularly with an established business, they might have an activity or a project that they want to embark on, which is going to increase their business.
So it's a growth opportunity to add some more physical capacity to their production line, or to add premises or something. So
absolutely. So a recent example is Holgate Brewhouse. So it's a craft brewer, one of the pioneers of the craft beer industry in Australia, in Macedon Ranges. So Paul and Natasha Holgate were building a visitor centre, tourism visitor centre, and wanting to put a canning line into their business. So a capital-intensive exercise is going to cost money to do that. And where do you get the money? You go to a bank for finance, and that has an interest cost. Or now an alternative is offering shareholders an interest in the business, selling a portion of the business to fund that activity, which is what big businesses do all the time. But now it's available to small business.
Was there for those owners in that case, was there a challenge in finding bank finance in that case, or was there just something more attractive about raising money through an equity crowdfunding program?
In the Holgate case, it's an established business and a strong brand, and I think they've got good relationships with their bank managers, so they're able to get support from their bank. But not all businesses have that luxury. But I think from a capital management perspective, debt can be expensive. You have to pay interest, but also in terms of cash flow. You'll need to factor that into your business operations, and I think selling a portion of your business through equity is another lever that you've got in terms of managing your cash flow.
So how do government and the regulators see equity crowdfunding?
It's a new regime. There was a lot of time spent figuring out what was the best design of the crowdfunding regime. So it was a long gestation, probably about 5 or 6 years in terms of industry consultation before we got it in. And a lot of time was spent figuring how do we protect retail investors. I think that's what government in particular, the regulator is concerned about, that retail investors have enough information to make informed decisions on investing in these opportunities. So we have a regime that we need to comply with. All offers need to prepare an offer document, which is essentially a cut-down version of a prospectus like you would see for a public offer of securities. But we've hosted 43 successful offers now, and most businesses draft this offer document themselves. We offer some guidance, but these are things that usually would cost hundreds of thousands of dollars in professional service fees. But we're really committed to make it, to ensure that it is efficient and cost effective for small business.
So it's very much targeted at small businesses. Of those 43 today, what kind of businesses and industries have you covered so that the listeners might start to relate to their own particular business?
Yeah, it's really broad, and as a platform, we like to work with businesses that have a strong consumer proposition. So, your mind automatically goes to things like craft breweries and cafes and, things like that. But, we've also hosted offers for businesses that don't have a product or service to an end consumer that you might not think are sexy kind of businesses, but it's all about being able to build an audience, an engaged audience that is interested in the offer. So that's really what we look for. Who cares about this business succeeding and who would like to be involved in this business? And it's not always the things that you expect.
Yeah, but I think maybe with those consumer-facing businesses, Holgate as one example, would have a pretty raving fan base for their beers. So does that make it easier to find shareholders because they're tuned into that beer or that cafe, or
as opposed to perhaps a business-to-business type organisation where they don't necessarily have the fan base that might be valuable in that space.
Yep.
So do you do work in that B2B as well as the B2C?
Yeah, we do, and a great example is a business called Advisor Ratings. So they're a TripAdvisor type service for the wealth management, financial planning industry. And I think it's a great example because it's not what you would automatically think would work with reward crowdfunding, because it's certainly not craft beer. It's a data business for wealth management. But 65% of the people that invested in that offer were financial planners that used the service or thought this is a good service that will improve our industry. So I use it as an example when speaking to companies that have a B2B model to say, well, do you have, who are your clients? Would your customers be interested in investing in your business? And it's not totally new. There've been some great examples of this strategy. The Melbourne Weekly and Anthony Catalano, when he was setting this up, sold shares to real estate agents who were going to buy advertising in the publication. So it makes sense. You're trying to bring your customers closer to your business, and that can work for retail or it can work for B2B.
Yeah. So that's for an owner out there. What sort of amounts of money typically can you raise for a business?
So the smallest offer we've hosted was $130,000 for a business called Needle Calm, and they're a medical device company that helps reduce anxiety for people with needle procedures. The largest offer we've hosted was for Sheba Rideshare, which is an all-women ride-sharing service, an alternative to Uber, and we raised $3 million from over 2,000 investors. So that's the spectrum.
So is there a minimum though? So that was the smallest one you have. Is there a minimum starting point?
Look, I think, before we did that 130,000 deal, we were saying about 150. 150 was probably the lowest. It's actually not. It's more for the company, I suppose, that we provide that guidance. It's not so much about our fees. We're really committed to helping anyone who needs it and who we feel we can help. But it is an intense period of effort, and you want to raise enough money to make it worthwhile and to be able to execute the plans that you're marketing.
So can you talk a little bit more about that intense effort? Because I'm gathering it's not just as simple as putting a document out there and waiting for the funds to roll
the
in.
The universe will provide. Yeah, it's no, it is an intense period of work, and like we try not to scare people off, but also we need to be upfront that for a period of time, this will be the most important thing that you're doing in your business. But we work generally to a 10-week process, and it's partly driven. The length of time is partly driven by that fact that it is an intense period of work. And so you need to, finish it and then get back to running your business.
So it really puts the onus back on owners to firstly make the commitment, but I guess even before that, understand that it's imperative that they find this money for a good reason. It's whether it's to grow the business. So really kind of focuses everybody on it's a long period of time and time out of the business. So you have to be very clear about why you're doing it.
Yep, absolutely. But it's and this is the added advantage of an equity crowdfunding offer is that you're marketing your business at the same time as you're raising capital. So because we're advertising these offers, you're building your brand at the same time. Yep. So that's kind of, I suppose, how a lot of businesses get comfortable with this is that, in the old days, you're pounding the pavement and chatting to, investors behind closed doors. But to execute these campaigns well, you need to be shouting it from the rooftops, and that's good for your business as usual stuff, but also for your capital raise.
It's really you really got to endorse your business to people you know quite well, I think.
Yep.
Because they're some of the people that may invest. Is that
absolutely? I think this is. I mentioned that the regulator has been concerned about investors, perhaps getting a rotten deal, but and that's valid. Like there's been some horror stories in the financial services industry over the years. But what I think is quite nice about this, and certainly our approach, is that if businesses are targeting their most passionate fans and often their customers, there's a natural tension or accountability that exists in that type of relationship. So, companies, they feel they have to or they want to do the right thing and are very earnest in how they're approaching the market because, essentially they're pitching to their customers for investment. And, if that isn't enough to kind of make you earnest, then you've got bigger problems in your business than just raising capital.
So post the fundraising, you've got to live in that community. And,
absolutely.
Your stakeholders are going to be sitting out in the front bar.
Absolutely. And some people are a bit frightened by that prospect, understandably, but, they're probably the ones that maybe this isn't the right model for. Like, you really need to embrace that you will have, ideally hundreds or thousands of shareholders that are close to your business, and it's quite empowering, but it can be a little bit, confronting when you approach it. But what we find is most companies, they accept it, and then they're surprised and delighted by the other benefits that come from these investors that are, they're totally committed to supporting these businesses. They've invested because they're interested in the businesses. So, we hear great stories like this, a watchmaker who has all these distribution arrangements now in, Asia and other parts of the world because an investor has come in and, said, I just want to help you grow this business. I'm an investor now and I love it. And, other situations where, people have invested in businesses and then, offered advisory services and, all sorts of other things beyond just the capital that they're committing to the project.
Can you explain to me how it works if a business is seeking a specific dollar amount to do a refurbishment or a build or a startup? Can the crowdfunding oversubscribe, or does it not go ahead if it undersubscribes?
Yeah, so there's two amounts that we need to keep in mind, and indeed we need to set. There's a minimum target. So if the offer doesn't pass the minimum target within the offer period, then no money changes hands and it doesn't proceed. Then there's a maximum target, and under the regime, we can raise up to $5 million per company per year. But we think it's best practice to hit a maximum target that is achievable and fully subscribe the offer. Because once you hit the maximum target, we have to close the offer. We can't raise any more. So in a sense, you can't be oversubscribed, but you can be fully subscribed. And we think that's best practice. Turn people away and get them, primed for the next one.
Build demand for the next one, yeah. So if, after an owner has raised some money, how does life change as a business owner, or does it change?
I suppose in a formal sense, there are a couple of things that companies need to be aware of. They'll be subject to related party transaction rules, and this is a feature of the public company regime. Basically, that means that your dealings with related parties, so if you're a director of a business and you've got another interest off to the side, then that either needs to go to shareholder approval or you need to apply an exception like arm's length dealings.
So that a practical example could be, say, a cafe operator who has an interest in a roasting business and the cafe raises funds, has an agreement with the roaster which the owner has an interest in as well. That's got to be disclosed so everybody knows exactly where the beans are coming from. Is that a good practical example of that sort of related party?
Yeah, I think that's a good example. Another one that comes up regularly is, marketing businesses that sit off to the side. Sometimes you might own a part of a business or own a business and then bring the investors in, and then there's a marketing business that, provides services to the company. If that's controlled by the director, if it's a related party, then you need to deal with that company on an arm's length basis and satisfy yourself about that. And look, that makes sense. You're taking money from the public. If you're controlling other entities, everything just needs to be above board. And most businesses get this right. But that's one thing to bear in mind is you are formally subject to these obligations.
So the books are open for the shareholders, the new shareholders, to have a look at.
So that's the other point to mention is that proprietary limited companies have an obligation to produce an annual report. So once a year, they need to lodge their financial statements and prepare a director's report and with ASIC and make it available on their website for shareholders. Now, in my view, that's not a very onerous. It's an important obligation, but that's perhaps not enough. And so we strongly urge companies to engage and report to their investors more frequently. Informally, the formal reporting is once a year, but choose a frequency that you can commit to, and whether it's monthly, quarterly, twice yearly, but stick to that. And I think more than once a year. Once a year is not too burdensome.
Develop a pattern of consistency, so we're releasing information, good, bad, or otherwise, and keeping everybody informed.
Absolutely. And we mentioned about like raising capital in the future. That's the advantage. That's what we say to businesses. This campaign should do two things: provide you the capital you need to execute your plans, but also provide a pool of liquidity that you can draw on in the future when you have further plans. And the best first place to go when you're raising capital is your existing shareholders. If the business is doing well and you've got great opportunities,
and they're in the loop with
and
what's
they're in the
going
loop,
on.
and you've nurtured the relationship, it's easier to go back to them and say, hey, we've got these exciting plans ahead. Will you join us again?
So what's the outlook for crowdfunding, and where do you see it going over the years ahead? Is it a maturing area? Is it an area that will be a niche component of the finance market, or do you see it being a substantial player in the space?
We certainly see it as being a substantial a source of capital for early stage businesses, and if we look at the UK as an example, and the UK is probably the most mature equity crowdfunding, and indeed the first equity crowdfunding regime globally. 2012 was when the platforms over there started to emerge. Last year, about £430 million was transacted on the two main platforms. So there's two platforms that pretty much share all of the market over there. We certainly believe that Australia can grow in proportion to the size of the UK market over the next few years. COVID's been a bit of a blip. We were expecting to be a lot busier this time of the year than we have been. But that said, we've still hosted 6 successful offers over the last few months, which unprecedented, challenging times. And we've opened 7 offers this month. This time last year, it was 5. So hopefully a blip, but back on an upwards trajectory.
That's a good sign in these difficult times, Matt. We've been talking with Matt Vitale, co-founder of Birchal. Thanks very much for coming in today, Matt. We really appreciate your time and insights on an interesting new area for growth capital for small businesses of all types. I think that's the message. Really appreciate your time. Wish you well in your business.
Pleasure. Thanks for having me.
Well, that was a great interview. Great to meet Matt and learn a lot more about crowdfunding. For me, one of the big takeouts is that for regional communities where there is a real engagement with that community, this could be a real opportunity for them to fund their business. Yeah,
look, I think the equity crowdfunding looks like it's on the march. It paints a very positive picture, and it looks to be quite accessible to quite a range of different types of businesses and of different sizes. So something for the listeners to really consider. So that's all for today's episode of Small Business Banter. David and I continue to be inspired by bringing you small business experts and hearing your stories. For any of the links, resources or information we've talked about on the show today, or to contact David or I, please head over to smallbusinessbanter.com. And David and I would love you to tune in at the same time next week for another episode of Small Business Banter.